Weather and life both change quickly. Do you have a farm estate plan? You need to learn the best option to help your family avoid or minimize federal estate taxes and other costs.
I'm Brad Swenson, President of Swenson Investments in Commodities. We work confidentially with farmers, ranchers, and advisors to help develop the best farm estate plan.
Well, it's almost the end of the year, and farmers probably have something different in mind than, oh, just Christmas vacation, and it's the first of the year, it's time to party and everything else.
Farmers do like to spend money this time of year, Brian, but they're typically prepaying expenses. Let's face it, harvest just got over, and for many farmers it was a pretty successful harvest this year, so they've sold some grain, they've got some money. Well, when you're sitting around with a little bit of extra money, you like to start buying things too. So for farmers, they know they're going to have to spend a bunch of money putting in next year's crop, so why not pay for that right now?
So today we wanted to talk about the different types of prepay and the implications of those for farmers.
Well, it can't be just fun spending money. The government has to look at some money a little different than other money. So let's say a farmer wants to buy a new tractor. Well, why is that considered so different than if a farmer just wants to buy some seed corn?
Well, the reason why is because of the fact that you're going to use that tractor for many years, whereas the seed corn, it's 1 year, bam, you're done. So, I mean, it's totally understandable, and every business has to deal with this. They have to either expense certain items that are going to be used in 1 year versus when they depreciate or take that expense over a period of years with fixed assets. Well, if you're going to buy a piece of equipment, like let's say a tractor, the last couple of years there have been certain breaks. So if, let's say, the tractor cost $150,000 last year, for example, you could deduct the entire thing from your income tax.
Well, here's one of the things where I think the government actually gets it right. Now, I know there's a lot of things that I don't agree with about how things get done, as you probably have different things you don't like too. But one thing I do like is when the government wants to get the economy going, they stimulate it by allowing some tax advantages for different businesses or individuals. Well, one thing that they notice with farming is, wow, when farmers buy a new tractor, it may be a $250,000 expense depending on the tractor they buy. If we could just sell 4 of those, that'd be $1 million pumped into the economy.
Yep.
So to get farmers to take money that they may be saving somewhere just in case of a rainy day, or they want to buy another piece of land or something, they say, look, spend it on equipment now, you can deduct it this year. Well, that's a good deal for everybody.
Yeah, and I mean, the farmer's going to be able to deduct it at one point or another. He was either going to deduct it over a 7-year period or in a 1-year period. It's just now he gets to take it in 1 year. So, but once that 1-year deduction is gone, it's gone. He doesn't get to continue to deduct anything in the future. But it's really a big deal for farmers because in the past, they didn't have this option. They had to depreciate that piece of equipment. And so in order to prepay expenses and reduce their net income that they had to pay tax on, they would prepay for things like fertilizer, herbicides, and seed, all things that would get used up in 1 year and all things they could immediately take off their net income statement. But with this depreciation thing, this deduction is called the 179 deduction, where it allows a farmer to prepay right now up to $500,000. Now, we're not tax experts, so make sure if you're a farmer, you're talking to your accountant, your tax advisor, and find out what the actual rules are in your case, because one little stipulation here is you have to show a profit.
Well,
so if you take a loss, you can't get that extra deduction.
But for a lot of farmers, what they'll do is say, well, I don't know what next year's crop's going to be, so I'll just keep some of that grain in the bin just in case my crop gets wiped out next year. At least I've got some money I can eat with. Well, if farmers have some grain stored up in their bins, they may say, wow, you know what, in order to deduct this equipment right now, I need to take that income right now. So now they put more money into the economy and everything gets moving a little faster, and it's good for everybody in our country.
Well, once again, with farmers, they have a very different tax advantage, and that's cash accounting. They're allowed to run on cash accounting instead of accrual accounting. So any expense they take, when they spend that cash, whether they use it this year necessarily or not, like with a new piece of equipment, they are allowed to get a 179 deduction and take some of that expense on this year's taxes, and it could be a really big deal. I mean, a lot of farmers right now are buying $250,000 pieces of equipment. If they can take that right off their taxes, it's a big deal for the farmer, but again, it injects a lot of money into the economy.
Oh, one other thing that injects money into our economy is our weed of the week. If you've got this thing,
or it robs money from the economy.
It may cost you a little bit either in yield or in money trying to get it under control. We'll explain coming up later in the show.